here are the steps I want you to follow right now. First things first, you got to establish your business. I don't care, boss. You have the idea. You're very excited about it. I understand that, but you have to actually take the first step to establish your business. So what type of legal structure do you want to surround your business with? Because you can think about an LLC, a limited liability company. You can have an LLP. You can have a partnership. You can have an S corporation, a C corporation. So depending on the states where you are located at, you might want to actually go for a specific legal structure. So this is really important. And what I want to say here is that when I'm asking you to establish your business, please, if you have no idea what I'm talking about, you can actually go online. There are services that will take care of you for that. So you want to create a legal name. You want to set up a business phone number. Okay, because it's all about adding credibility to your business. It's all about making sure that your business looks legit. This will be more important later on when you are trying to apply for a net 30 account with vendors, or you are trying to get a business credit card, a business loan, a business line of credit, or what have you. So the constellation of options really expands once you have the proper foundation. And this is what I want you to do. Okay. And you also need to think about a business address. The whole thing is, I don't care if you work from home, you can still have an online, a virtual address. Okay. And it's very important that you separate your personal address, your home address, your private address from your business address. Very important. So first thing, you want to establish your business. The second thing is you want to register your business with the state. See, the whole thing is that you are required as a legal entity. Once you have a legal entity, you need to actually file paperwork with your state. So it's basically, this is important. Sometimes you'll need to send like articles of incorporation if you're a corporation, an S corp or C corp, or you have to send articles of organization if you're a partnership, an LLC with the state. It's very important because the state, they will put you in their database, and every year you'll have to actually file some kind of annual report. In some states, you have to pay taxes also. For example, California, you have to pay about $1,000 if you have an LLC. It's very expensive, but hey, it is what it is. Okay, so you have to pay taxes based on your revenue. And if you don't actually comply with those requirements, the state will not issue you a certificate of good standing. And that certificate is really, really quite essential, especially when it comes to building credit, helping you build credit through net 30 accounts or business lines of credit or business loans. The third thing I want you to do, boss, right now, by the way, I just want to welcome you back to the show. It's just been wonderful, really great to have you here. And so the third thing I want you to do right now is to get your EIN. See, after establishing your business, after registering your business with the state and all that kind of stuff, so now you are actually in a better position to actually go to the IRS and say, listen, IRS, here I am. I want you all to actually issue me an EIN. So it is called an employer identification number. And please don't let anybody lie to you. People are actually trying to play games with you and tell you, hey, listen, I'll do this for you for $200 or $300, whatever. No, you can do this yourself. Now, if you are too busy or you don't want to actually do it yourself, then you can pay someone. You can pay a third party. Actually, one of those services, InkFile, among others. They actually can, those are LLC formation services or business formation services in general. They actually have some of their packages where they will file the EIN paperwork for you. But you can do it yourself. You can actually go to the IRS's website and you can actually fill in the paperwork and you just get your number. It's very easy. It really takes about 10-15 minutes. Nothing complicated. Okay. Don't let anybody try to lie to you. So the third thing is you want to get your EIN. Step number 4, you need to open a business bank account. This is another pivotal step in your ability to actually build business credit as a startup. So when we talk about having a business bank account, the reason why having a business bank account is important is because if you were to get a loan, or if you were to get a business loan, that is, if you were to get a business credit card, all those issuers and lenders, they have a business account or business bank account statements as a requirement that you have to go through. because having a business bank account adds another layer of credibility. It just shows that your business is legit. And that's what you want. You want to show everybody that your business is legit, right? So it's really important to really think that way. By the way, I just want to quickly remind everybody of today's topic. We're having a conversation about how to build business credit for a startup. Okay, so step number 1, you want to establish your business. Step number 2, you want to register. You want to register your business with the state. Step number 3, you want to get your EIN. Step number 4, you want to open a business bank account. Now, it's always better to actually open a business bank account at the same bank where you are currently at the individual level. So if you have, let's say if you have a personal bank account with Chase, it's better to start with Chase when it comes to your business bank account, because they already know you. The transaction will be really fast. You don't have to submit some paperwork because they already have your some of your identification on file. Because if you were to go, let's say from Chase to PNC, PNC might require you to actually to resubmit data that you already have submitted to Chase. But listen, if this works for you, that's fine. Step number 5, you need to continue building relationships with vendors. What does that mean? The thing is, as you continue to build your business, okay, you got to think about cultivating relationships with net 30 vendors. And we have actually covered on this on another show. What you want to do is, there are some net 30 vendors that they actually specialize in granting credit for startups. So what you want to do is, you want to actually get closer to them. You want to contact them, and you want to find ways where you want to find the conditions. And usually they want you to buy something. Right, the first purchase, you have to pay for it, right? You have to charge it on a credit card or debit card. That's fine. But the subsequent purchases, those could be on net 30 conditions, or net 45, or net 15, depending on the size of the volume of the purchase and your own condition, your own financial situation, the business, the way you present the business. So that's very important to think about. And what I want to say here is that when we talk about net 30 vendors, just make sure that the net 30 vendors, the one that you choose, they report your transactional data to the business credit bureaus, because it doesn't make sense. You know, the whole thing is people want to buy things from you, so they will start messing up with you, trying to lie to you about, hey, listen, we have a net 30 vendor, we have net 30 account, we'll grant you everything you want. But listen, what if they do not report to Dun & Bradstreet, to Experian Business, and Equifax Business? Then you're just wasting your time. They're just wasting your time and money. So you're buying from them, and you actually do not actually get the benefit. You do not derive any benefit from that. So we have actually covered this on other shows where we actually presented net 30 vendors that report to all 3 credit bureaus and even more. There are some vendors such as a Granger or Uline or Quill that report to SBFE in addition to Dun & Bradstreet, Equifax, Experian. They have a SBFE, which is really great. SBFE is not really a credit reporting agency. It is more like a database, but it really helps also. And step number 5, you want to use your business credit card. First of all, you have to apply for a business credit card, and if you are lucky to have one, you have to use it. Again, I want to remind you of today's topic. Okay, we're still having a conversation about how to build business credit for a startup. So establish your business, register your business with the state, get your EIN, open a business bank account, continue building relationships with vendors, use your business credit card. See, once you have your business credit card, and it doesn't matter, even if the business credit card at the beginning is secured, in other words, you are using your own deposit to actually secure the whatever balance the banks grant to you, it's fine. It's okay. They'll probably just, you probably just have to use it for 3 months or 6 months. And after a while, the bank will graduate you. Okay. And so you got to use it. So you have to actually use the card and pay off. And those transactions will be reported to the credit bureaus. What will happen here is that the credit bureaus will see that you do have trade lines and open trade lines. This is really great. Step number 7, you got to pay early and often. You know, when we talk about business credit scores in general, especially Dun and Bradstreet, they have a score called Paydex, and that Paydex actually places a higher emphasis on paying early. So if you want to actually boost your credit score by you want to boost your credit score above 80, because 80 is actually the threshold. When you talk about Dun & Bradstreet, if you have a score of 80, actually the Dun & Bradstreet, you have scores that range from 0 to 100. So if you have an 80, that's like acceptable. In other words, you're paying your bills on time. But anything above that, that means you are paying, not only paying your bills on time, you are also paying early. And that's what a lot of vendors like. Okay, so you want to be in a situation where you are able to charge stuff on the credit card or have stuff on the net 30 account. And if they tell you, if they send you a bill, right, and they say, well, your bill is due, let's say February 23rd. Okay, February 23rd it is. That's a deadline. What you want to do is you have an automatic reminder where you tell yourself the due date is February 13th or February 17th or February 20th. That way, what will happen here is that the vendor will report to Dun & Bradstreet that even though the bill was due on the 23rd of February, you actually paid it out. You actually paid it on the 17th or the 16th. So this will have a big impact on your paydex score. And Experian and Equifax also have a similar sort of models when they calculate their business credit scores. So this is really important to remember. Number 8, you need to focus on credit utilization. So when we talk about building business credit for your startup, you got to think about your credit utilization. So much like personal credit cards, business credit cards and business lines of credit have a recommended usage. So you really, if you want to maximize your credit score, make sure that you do not keep more than 30% of your available limit on the card. Okay. And this only applies when we talk about credit utilization. This only applies to revolving lines of credit. So this could be a credit card, a business credit card for your startup, or a business line of credit for your startup. So either way, just make sure whatever you charge, you can charge more during the month, right? You can charge, like, let's say you have a credit limit of $1,000. You can actually charge transactions that actually get closer to $1,000 during the month, but the balance that should remain outstanding at the end of the month should be less than $300. In other words, 30% of $1,000. I want to have a general conversation with you, and this is the overview where we are trying to really understand what we mean by business credit. So if your business is new and doesn't have a credit history, there are a few things you need to do. But we want to go, and those few things I just told you, right? Establish your business, register your business with the state, get your EIN, open a business bank account, continue building relationships with vendors, use your business credit card, pay early and often, and focus on credit utilization. But the big question is, what is business credit and why is it important? So when you really think about it, and this question is kind of similar to personal finance, the one we will be asking if we're discussing personal finance. So business credit is a major financial tool for your business, especially if you're a startup. Nobody knows you, right? So it is you just like a blank piece of paper, right? And a blank sheet, and the thing here is that you could put everything on there. So if you have a business credit, good business credit, you are able to qualify for business loans and other forms of business financing. And business credit is also an essential tool for building relationships with vendors and other business-to-business sellers, right? B2B sellers. The thing here is that when you have a startup, you're going to need all of those stakeholders. You're going to need business credit cards. You're going to need business loans. You're going to need net 30 vendors or net 45 vendors, unless you want to run your business with cash, like you have a lot of cash and you just want to use your own cash to run the whole business. Otherwise, you will need those vendors, for example, for your inventory. Okay, and let's say you are in an industry that is cyclical, so you basically have you go through stuff, or seasonal, by the way, and you basically go through stuff. So every quarter, so you have one quarter that is very good for your business, and another quarter that is not good. So you have this sort of yo-yo, right? So first quarter good, second quarter bad, third quarter good, and fourth quarter bad, or vice versa. When that happens, you need to have a relationship, a strong relationship at that, with net 30 vendors, so that they can actually allow you to actually get inventory right away and pay it off within 30 days, 45 days, or 60 days. Because if you are, let's say you are in a quote unquote in a bad period, in a bad quarter, where you know your revenue goes down and you have no cash or barely anything, you don't have the money, but you still need to sell, because if you don't sell, then you're just out of business, right? So you still need to sell. So what you do is and if you cannot get a loan from a bank or a credit card, from a business credit card for your startup loan, having a net 30 vendor, this is really great. And I really want to emphasize the importance of having good business credit for a startup. It's one of those things where a lot of people will tell you, well, if you are a startup, you really have no chance to build a business credit. And I'm here to say this is actually false. If you are a startup, you have all the opportunities in this world to build business credit real fast. And with good business credit, you have a constellation of advantages. People telling you, well, the thing is, if you're a startup, just focus on revenue, focus on profitability. Maybe after 3 years, you can start thinking about having a business credit score. And we say you got to do those two things simultaneously. In other words, you need to generate revenue, and while also working on your business credit. Because once you have a good business credit score, remember, financing is cheaper, right? Instead of people charging you APRs in the 20s, they might actually shave off 10 points. So you start getting APR on business credit cards in the teens. For example, 15% as opposed to 25%. So this has a huge difference, especially if you have a consequential limits on your business credit cards. This has a huge impact. Okay. Vendors may not require prepayment if you have a good business credit score. And going back to what I said earlier about if you are in a cyclical trend or you're in a seasonal trend and your business actually makes money in within a certain time of the year, that means for the rest of the year where you're not making sales, you have to survive anyway. So if you have vendors who do not require prepayment, that's really good for you. Suppliers and lenders may agree to better terms also if you have a good business credit score, right? And having a good business credit score also facilitates the separation of personal and business finances. And this is where you want to be anyway, right? You are trying to actually get into a position where you are segregating systematically and reflexively and automatically your personal affairs from your business's affairs. And also when you have good business credit, all stakeholders, lenders, credit card issuers, net 30 vendors, they look at you as a financially stable startup, as a business who knows how to run its operations. And this is what you want. This is the kind of reputation you want to leave in the marketplace anyway. So once you have done all the homework and you have actually built your business credit score to a certain level, and if we were to take the Paydex metaphor here, then you want to be above 80, right? So how do you maintain that? How do you maintain business credit? Because the work doesn't stop just simply because you have actually moved up. You got to really work harder to actually make sure that you maintain this 80 or 85 or 90 business credit score that you have actually reached, right? Well, everything starts with your liquidity management. In other words, do you understand your cash inflows and your cash outflows? Because you cannot maintain business credit if you have no grip, no solid grip on your business's finances. And when I'm talking about business's finances, I'm talking about all sources of finances. Because when we talk about cash inflows and cash outflows, we're speaking about, for example, your own money from your family members if they are lending to you or they're investing into the company. You have money from investors, outside investors. You have equity. You also have debit or credit. So credit, for example, would be loans, lines of credits, credit cards, business credit cards. Okay, and so to maintain business credit, you have to really have a solid grip, as I just said, on your revenue versus your expenses. That's one thing. So revenue minus expenses, that's one thing. Number two, you want to look at the seasonality or cyclicality of your business processes. What are the months where you make money? What are the months where you make less money? And you need to maintain a level of, I would say, steadfastness. Okay, steadfastness when it comes to your business liquidity. What I'm trying to say here is that let's say you make like the bulk of your cash from November all the way to February, like tax preparers do. Like they sometimes go all the way to April, but you get the gist. So once you have a business that is that cyclical, that means that you have to actually have a strategy, a solid plan to deal with months where things are slow, like from April all the way to November. You got to have a plan. You got to actually diversify your income. Okay. And you can also, by the way, if you are trying to maintain business credit, you can also check your business credit scores periodically. And usually you can actually sign up for this with the Dun & Bradstreet, Equifax, and Experian. They all have programs whereby you can check your business credit score, but you have to pay for them. Okay, Dun & Bradstreet actually gives you a 14-day free trial for your payday score, but after that you have to pay for it. Honestly, I've said this on other shows, it makes sense to actually pay for this service. It is worth it. So let me just quickly, so what's the bottom line here? So for your startup, having a business credit score that is high is essential, especially if you're trying to run a financially viable and healthy startups, okay? Because it shows at the end of the day that you are a good business, and it proves to lenders and other businesses that your company is financially healthy and capable of making important payments. Important payments, that's a key word here, right? Because nobody wants to do business with you if they have no idea or no assurance that they will ever be paid for their services or products. So if you get a good business credit score, you will be able to get loans and lines of credit, but also you can have opportunities to avoid prepayment. So when you think about it, at the end of the day, this tool is more like a negotiation tool that allows you to drive down prices and obtain more favorable interest rates and terms on financing packages from banks and online lenders. By the way, from credit unions also, because in the last 5 years, we've seen a resurgence of credit unions in the startup sort of arena, and they are just trying to grab business here and there. Okay, so if I were to recap this for you, the best way to build business once your business credit, once your startup is legally established, is to pay your bills on time and early whatever possible. Okay, bill payment is critical. It is quite essential. So you can also think about opening business credit cards and keeping your credit utilization below 30%. So this gives you another leg forward in terms of stabilizing your business credit score or even increasing it. Okay, so you can really, if you do those things, you can further establish a favorable credit score. Okay, so also think about your company's financial reputation and make sure that you are constantly talking to the major credit agencies from time to time to ensure that your business credit score is accurate. Do not trust them. Do not say, well, I think I think they have done it. They've done a good job in the last 3 months or 6 years or whatever. So I don't need to double check. You need to double check because Dun & Bradstreet has millions of customers. You're not the only one, but you are concerned about your own credit score. So very important to double check those things from time to time. Thank you so much for your attention. I want to quickly recap to this conversation. So I was just explaining to you how to build business credit for a startup. So number 1, establish your business. Number 2, you want to register your business with the state. Number 3, you want to get your EIN. Number 4, you want to open a business bank account. Number 5, you want to continue building relationships with vendors. Number 6, you want to use your business credit card as often as possible. Number 7, you want to pay early and often. Number 8, you want to focus on credit utilization. Thank you so much for your attention. I really appreciate it. God bless you. I'll see you next time. But until then, remember, stay marvelous.